It's almost a year since Russia invaded Ukraine, causing misery in the energy-rich region and spiking the cost of fuel. But that's not the only reason for high prices. Diesel makes up about 40% of what's pumped at the nation's bowsers, but falling prices haven't been passed on to consumers, according to analysts at FuelTrack. That red line is the wholesale cost of diesel. You can see it's dropped significantly since October. This graph shows the retail margin. Over the long term, service stations make about 15 cents a litre on fuel and then have to pay costs before taking some profit. But as you can see on this graph, with diesel, someone's having a margin party. When you're putting diesel in your car, you're also pumping a bit more profit into service station operators. Keep an eye on that, because the price of crude oil has fallen by nearly 10% in the past 2 days. Crude oil is refined to make products like diesel and unleaded, and it fell by more than $4 a barrel overnight before a recovery. That's because traders are worried about the threat of recession in big economies like the US. Stock markets in the US lifted overnight, and Hong Kong's index has rocketed 7% in the past couple of days because investors think the Chinese government is going to try and use stimulus programs, like giving people money, to kickstart the economy. At home, our All Ords index of the 500 biggest companies barely moved, still in holiday mode. And the Aussie dollar was down against major currencies. If you're into cryptocurrency, Bitcoin is down 60% from a year ago. And that's finance.